We mentioned there is more turmoil in the stock market today over the unknowns surrounding the coronavirus.
Stocks sunk again today, sending the market into its worst week since 2008.
Eyewitness News reporter Logan Wilbur spoke with financial experts. He joins us now with what they say you should and shouldn't do. Logan?
Well, with more cases of the coronavirus popping up around the world and the stock market continuing to slide, panicking may be your first response. After speaking with local financial advisors this week, I learned your first response should be relax and let this play out. 5 days of stock market losses as the coronavirus continues to give the world more questions than answers.
What the markets never like is uncertainty.
Uncertainty will likely continue to prevail while the world searches for those answers.
The big unknown is still how this is going to impact companies, how it's going to impact profit margins, supply chains.
As concerns over the market grow, so does questions over a possible recession.
I think it's important, primarily to keep things in perspective. 1,000 points or 4,000 points when the Dow is at 29,500 is a much different situation than when the Dow is at 12,500.
With similarities in the current market to 2008, we asked financial advisor Daniel DuPont if you should be worried about this week's market slides.
In 2008, we had a financial system that was probably much more fragile than it is today, not just in the U.S., but even globally. So I think there were definitely lessons that were learned as a result of that.
DuPont points out a number of times the market has crashed and remains confident there is no reason to panic because the market always rebounds over time.
I've seen this movie before. Different times, the actors are different, the storylines and the plots are different, but if you stay in your seat until the movie finishes, it always ends the same way. You just have to have the discipline and the stomach to sit in your seat until the credits show.
And DuPont tells me one of the many reasons not to react to the market during times like this is because you will then be burdened with the decision making of when to jump back into investing. Live in studio, Logan Wilbur, Eyewitness News.